This is your LMAX exchange technical update for Friday, March 17th, 2017. Euro dollar. So the euro continues to show impressive follow through since breaking out above that key level that we had talked about at 106.80. The break now suggests that the market is carving this right shoulder of an inverse head and shoulders on the daily chart, which if broken could potentially project gains all the way up towards the 114 area over the coming days and weeks. Right now, the next key resistance comes in the form of the neckline, which we would call that 108.70 at 108.75 December 2016 peak. A break above there will solidify or secure this pattern formation and then open the door for a further acceleration of gains. In the short term, the next key level of resistance above comes in the form of that high that we saw back on the 2nd of February, just under 108.75 at around 108.30. Right now, any setback should be very well supported by this previous resistance turn support at 106.80, while ultimately only back below the 104.95 low that we had seen where that right shoulder is would negate this current bullish outlook for the euro. Sterling dollar. So cable continues to extend its impressive recovery out from recent lows after the market had stalled out just shy of 120, and this now sets the stage for a more significant recovery over the coming sessions back towards and through potentially the 125 area. But ultimately, this is a market that has been trading within a broader downtrend, and any rally should be very well capped up towards medium-term resistance in the 125 area, and only back above 27.75, the December 2016 peak, would negate the bearish outlook for sterling dollar. So any rallies here should continue to be very well capped despite this impressive run that we've seen over the past few sessions. Dollar yen. So dollar yen has been in the process of rolling over after once again stalling out above 115. This lets the market adhere to what has been a consolidation over the past several days and opening the door for a retest of the range lows down around the 111.60 area. It's worth noting that if the market takes out 111.60, it will expose a fresh downside extension towards a measured move into the 107s, and at this point any rally should continue to be very well capped. Only back above 115.62 would suggest that the market is ready for a more significant longer-term bullish resumption. Euro Swiss. So Euro Swiss is a market that continues to be very well offered into rallies despite attempts to break back above 108 in recent trade. The market was rejected that level and has traded back down below 107, and we've since seen a bit of a consolidation here, but overall, again, lower tops and lower lows is what the structure is showing, and we should eventually see a break below the 2016 base at 106.24, which would expose an acceleration towards the psychological barrier at 105 further down. Right now, we need to see a break back above and a close above 108 to suggest that we could see a bit of a shift in the structure. Aussie dollar. So Aussie has been very well offered over the past several months up towards the 78 handle. Most recently, the market stalled out just ahead of 77.50 at 77.40, although we are seeing another attempt in the past several sessions back towards that level. If the market would like to roll over, as we're potentially seeing right now after stalling out in recent trade, we're going to now need to see a break back below the recent low that was seen down around 74.92 to strengthen the bearish outlook and accelerate declines back down towards the 70 handle. If on the other hand the market breaks up to fresh 2017 highs beyond 77.40, it'll open an immediate test of the 78 handle, and at that point it'll be interesting to see how things play out as the market continues to be very well capped into this area on a medium-term basis. Dollar CAD. So dollar CAD had been looking really constructive earlier in a few sessions back, with the market trading all the way up towards that 136 multi-day peak before rolling over this week. At this point, though, the overall structure does remain constructive, and if we do see additional declines, they should ideally be supported into the 132 area ahead of the next upside extension back above the recent highs that we saw at 35 about, and through 136. Only back below 129.69, that low that we saw all the way back on the 31st of January, would compromise the overall constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is a market that has been very well offered into rallies and continues to show signs of the formation of a major top off the 2016 peak just shy of 75. We've since topped out most recently in February of 2017, just ahead of 74, ahead of this latest sharp decline all the way back down below the 70 psychological barrier. The market has attempted to put in a bit of a bounce out from recent lows, but again, this is a market that has been very well offered into rallies, and we expect a lower top ahead of the next major downside extension towards key medium-term support at 68.62. SPX 500. The S&P 500 is consolidating off record highs, and it looks like the market could be poised for additional record highs while it holds above 2350. The market is extended on a longer term basis, but again, we need to see a break back below 2350 to force a shift in the structure. If we see a break above 2400 to fresh record highs, that would expose next key psychological barriers at 2450 and 2500 further up. Gold. So gold continues to show how well supported it's been on dips. The market has since been showing signs of basing off that 2016 low, with the market stalling ahead of 1100. A higher low looks to be in place at 1180, that low that we saw all the way back on the 27th of January. And so this latest round of setbacks that has been supported just around 1200 is looking for that next higher low to be confirmed on a break above the 1264 recent high, opening the door for the next major upside extension towards and through 1300. At this point, only back below 1180 would compromise this constructive outlook for gold.